Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. In the international market, US Treasury yields on the longer end of the curve continued their march higher on Friday as well, as the market factored in a Democrat-controlled US government and potential for further stimulus spending, which in turn means further borrowing. On the economic data, the Labour Department reported on Friday that the non-farm payrolls fell by 1.4 lakhs versus expectation of only 50,000 fall in December amid a worsening pandemic. The unemployment rate is now at 6.7% in December versus 6.8% estimate. With the hope of additional fiscal spending, US 10-year was up 5 basis points closing at 1.13 percentage points, and 30-year was up 2 basis points closing at 1.87 percentage points on Friday. Please note that on 11th December 2020, which is just 1 month back, 10-year yields were at 0.90% and now at 1.13. That is an increase of 23 basis points in US 10-year yields in just a matter of 1 month. We at Knight Research feel on the medium term, US 10-year yields will not rise beyond 1.25 percentage points, and it acts as a very strong resistance. In the crude oil market, crude is at $55.58 per barrel. Short-term range is 54 to 57. Knight Research still remains bullish on crude at $60 per barrel in few months. In the currency market, dollar index or DXY is at 90.42. DXY's today's range seems to be at 90.31 to 90.70. A renewed buying interest was seen, but we at Knight Research are skeptical on the DXY strength, and we will need more evidences to change our stance. As of now, we still remain of the opinion that the weakness in the DXY continues and DXY may breach 88 level very soon. USD CNY or Chinese yuan is at 6.49. USD INR with a high of 73.45 closed at 73.24 on Friday. USD INR's range for today seems to be 73.20 to 73.55. As USD INR had breached 73.30 level on intraday basis, we feel it can give us a close around 73.30 today, but a high of 73.50 on an intraday basis. Again, 73.30 acts as a pivotal point for the next USD INR direction. In the domestic market sentiment to remain positive after RBI's special OMO announcements and upcoming inflation data. CPI inflation for December is due on Tuesday, and market-wide expectation for CPI is to fall below 5.50 from 6.93 in November. Reasons for the drastic fall in CPI are expected to be: number 1, favorable base effect, and number 2, cooling of vegetable prices. Short-term bond prices may fall on Monday because the RBI's announcement that it is restoring normal liquidity operations in a phased manner. As a first step, the RBI will conduct a 14-day variable rate reverse repo auction on January 15th worth rupees 2 lakh crore. As we had mentioned previously, the first thing which would happen is draining the systematic excess liquidity, which will bring the very shorter end of the curve higher. We at Knight Research expect up to 15 basis point increase in yields in 91 to 364 day papers. 522 GS 2025 closed at 501 versus 499 the previous day. 577 GS 2030 closed at 589 versus 589 the previous day. 8th January 2021, which is Friday's GSEC auction analysis. So in 515 GS 2015, the cutoff came at 100.15 or 5.11 percentage points. 585 GS 2030 cutoff came at 99.75 or 588 percentage points. The cutoffs were in line with the expectations, and that boosted the market sentiment. Things to keep in mind: number 1, hold your existing positions or create any fresh HFT positions till Tuesday, as very strong CPI numbers are expected, and that may add to positive sentiment. Number 2, Union budget is around the corner, and Knight Research strictly advises not to go overburdened with a large AFS or HFT book and reduce the event risk, as the odds are not in favor. Assess the risk of your portfolio, quantify and rebalance your portfolio. That's it for today. You were listening to Night Snippets with Parthesh Shah from Knight Fintech. See you tomorrow with the new episode of Night Snippets.